Some breaking news here. The US has just joined the military action against Iran by bombing 3 of their nuclear facilities. The airstrikes on the 3 facilities, Natanz, Fordow, and Esfahan, happened on June 21st, Saturday night US time. Now, the tactical reason that the US joined the war, not the geopolitical reason, is because the US possesses bunker buster bombs. These are 30,000-pound bombs that can be dropped from a B-2 or B-52 bomber and can penetrate underground. One of the nuclear facilities, Fordow, is at least 80 meters underground. Immediately following, Trump tweeted that all planes are safely on their way home. There is no other military in the world that could have done this. And he says, now is the time for peace. Thank you for your attention to this matter. I feel like I have to remind everybody that this is a stock market and finance channel, so I will be focusing on this conflict through that lens. It does not mean that I don't have political opinions about it, and it certainly does not mean that I don't sympathize or feel for civilians caught in the conflict. If we take a look at weekend betting markets, something that I don't put a ton of stock in, so I'll get into more of a deep dive analysis, but just off the top, through the CFD market, you could see that the NASDAQ is implied to be down 400 points so far. Now, this was a lot worse when the strikes first happened. It was down over 600 points, almost 700 points, and now has retraced a little bit back up to almost 400 points down. Now, before I jump into the charts and talk about stocks, what are the ramifications here? Because if it was just a matter of the US taking out Iran's nuclear facilities and we weren't engaged in a long drawn out war, then I think that the panic and volatility will be very short-lived. But we all know that the markets hate uncertainty, and the response definitely comes with a lot of unknowns. So number one, obviously, retaliation. Iran may strike US bases or interests via proxies or missiles, escalating tensions. There are a ton of US service members in the Middle East, about 40,000 spread across many different bases in many different countries such as Qatar, Saudi Arabia, Iraq. Iran could also utilize economic disruption as part of their strategy, blocking the Strait of Hormuz, which would obviously spike oil prices, commodity prices in general, and make things potentially more expensive, which would also impact global asset prices as well, since the markets do not like generally a spike in oil. Regional instability is also a risk if it becomes a broader conflict and different coalitions are formed on either side. And then obviously diplomatic fallout. If Iran was willing to maybe negotiate with the US before, they might not be willing to now, as they view this as an act of aggression. However, it's important to note, and I've talked about it on this channel multiple times, that war actually does not affect the markets long term, at least in the US. The only time that we've really seen a protracted dump in the markets during wartime is when the US was also coincidentally in a recession, such as in 2001 when the US invaded Afghanistan. As I've said before, the volatility in any subsequent drop is usually very short-lived, and wars, at least as it pertains to the market, are buy the dip situations. Whether it's World War II, Vietnam War, Gulf War, the Iraq War, the war in Ukraine. So that brings me to this post that I made on June 11th, where I was looking at the S&P 500 and said that the S&P 500, for one reason or another, in this case it might be geopolitical, typically tends to pull back right before all-time highs. This happened in August to September of 2024. This happened in December of 2024. And if you take a look at the S&P 500 now, you could see that it's been consolidating here for 2 weeks, which means that the market does accept this is a potential area of resistance. This last fair value gap here right before all-time highs. We do have major gaps below between May 9th and May 12th. There is also a bigger one below here between April 22nd and April 23rd. So I'm not going to try to predict the extent of Iran's retribution, but this technical setup here, as I've mentioned time and time again, is a valid one. And news is really just a reason for technicals to play out. As I mentioned in my last video last week, it is a very low risk setup here to hedge with puts, targeting at least that May 9th to May 12th gap. Because if you're wrong, your stop limit could actually be very close to entry here. Another thing you could do is wait to see if we get a drop and a break of market structure and hope for a retrace in order to take it short. Because could we leave this unchecked and head for all-time highs? Yes, of course, that has happened before. So if the market deems this as a done deal, the way that Trump is tweeting out saying that, you know, we did this, we've left the area, and now we are hoping for peace. Obviously, the prospect of the US joining the war effort isn't exactly brand new. Trump has been talking about this for a while. He even telegraphed that he would decide in 2 weeks or in maximum 2 weeks whether he would join or not, and then did a surprise attack on Iran's nuclear facilities. So the market might already see this as mostly priced in, and we might get some jitters on Monday. So if you are a more cautious trader, it could behoove you to see if we get a drop and a break of structure and a retest before taking anything short. But for sure, I think that these gaps will eventually get addressed. The election gap from November actually took a full 2 months to address. So before we move on to individual stocks, long story short, I do think that obviously there's a chance that we see very short-term volatility here. We do not know the extent of the retaliation from Iran, but in the long run, if we do get a drop, that drop, in my opinion, if it's just related to the war, is definitely a buy the dip situation. I still think that the market is going higher by year end. I don't think that even a protracted war will have long-standing effects on the market, because insofar as wars, this is not as bad as obviously the Vietnam War, World War II, etc. And we are not as involved as we were in Afghanistan, in Iraq. And in all those situations, the market actually did not show any midterm or long-term cracks. Like I said, the only time that it has is when the US was already in a recession and the market was already in a bear market. Now, in terms of individual stocks, all eyes will be on Tesla. June 22nd, today, as of the time of this recording, they are set to debut Robotaxi in Austin. Now, this is going to be a limited rollout initially, where there could be up to 20 Model Y cars circling around Austin on Sunday. People in Austin have already seen empty Tesla cars testing the Robotaxi program. Now, they're not going to be testing it on the public just yet. There are a few high-profile influencers and people in the space who will have early access to the Robotaxi app and will be able to participate in the pilot in Austin in a specific area to ensure that everything is working correctly before rolling it out. And it is expected to take at least a month for the full rollout to happen, obviously, if at every marker it is successful. Now, before I jump into which setups that I really like here, here's SMCI. This setup looks golden. But if we take a look at Tesla, you could see obviously that the market is consolidating here above the Trump versus Elon candle that we saw a 14% drop on June 5th. This is clearly behind us now, this narrative here. And we have been consolidating above this, and the market is waiting to see how the Robotaxi rolls out. Now, I said this on Twitter, but how the market reacts in the short term will depend on whether the rest of the market, not the Tesla bulls, have already priced in a successful launch or not. So everybody that's bullish on Tesla is already in. Has the rest of the market priced in a successful launch, or is it more of a we'll believe it when we see it type scenario, and when it actually rolls out, then the rest of the market is willing to participate? Here's how I see this going, just based off of technicals and how I've seen historically these binary events roll out. We have a bunch of consolidation here, all of these equal lows. I would not be surprised, and remember, I'm not Nostradamus, this is just a hypothesis that if it happens, I'm ready to act upon. I would not be surprised at all if the lows here of the consolidation get taken out in this gap that we see between June 9th and June 10th. You still have this gap here. We have this resistance, 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 and it will likely act as support here, obviously barring any sort of hiccups with the rollout. But if we take out these equal lows here at around 310 and test that 305, 310 level before potentially rallying higher to take out these equal highs. Now, this could take weeks for it to happen. I'm not saying it's going to happen immediately. And if I'm wrong, I'll certainly tell you, but I do not see, unless obviously the Robotaxi runs into a tree or a mall or something, I do not see us going below the Trump versus Elon candle. There's a reason that we consolidated here, but it totally makes sense if we have an initial liquidity sweep to shake out all of the weak bulls before the big players participate. Obviously, again, as long as everything goes according to schedule and the actual Robotaxi app and the Robotaxi service accomplishes what is expected of them. Now, in terms of really juicy setups, stocks to buy or options to play here, I do like SMCI. You could see that we are now breaking out of this bullish pennant, and this is above average volume for the first time in a month. I do wish we got a little bit more volume on this breakout here, but I do think there is a low risk setup here. I like to go for asymmetrical plays. The reason this is a potential low risk setup is because obviously you can buy this breakout and you could set your stop limit very close to where your entry is, targeting the next area of liquidity. So this internal high here at around $56, this will give you around a 3-to-1 R if this trade hits. If it doesn't hit, you can exit pretty unscathed. Going back to Tesla, I think if we do get that liquidity sweep, that is a prime opportunity to add. I already have a position on Tesla, but that is a prime opportunity to add if you are bullish on Tesla. I think gold looks good here for a multi-day setup. Again, a pretty low risk, high reward play here because you could set your stop limit very close to where you entered, targeting these equal highs again for another potential 3-to-1 trade here on gold. This is GC futures. A lot of people do trade gold options, whatever floats your boat. If we do get a VIX spike, which I think we might get at least on Monday, if we get a VIX spike, I think that that VIX spike is definitely shortable. You also notice how the conversation went from tariffs to war. If we take a look at Amazon, Amazon isn't going to be disproportionately affected by any war, short-term or long-term. And you could see this retracement here back to this area of support, which used to be resistance. This looks like a juicy setup for Amazon, in my opinion, to take it long again, because I do think Amazon is going back to all-time highs, especially if the market continues higher through the rest of the year. I think it does so with Amazon. In my last video, I gave you this chart on HIMS. We finally broke out of that bullish pennant. I think all-time highs is in the cards for HIMS as well. I think we did a great job taking profits on the Uber short-term plays. I still have Uber stock, but I was in Uber calls and we took profits here. I also gave you guys AMD in the last video and we broke out violently, hitting that 131 target. We made a killing on AMD. As a matter of fact, this is how I paid for this vacation, was taking those AMD profits. I'm in Puerto Rico right now. On AMD, I am waiting for a little bit of a pullback here, but I do think that the narrative on AMD has completely changed from being the advanced money destroyer. I think that you could see the momentum in the market, especially as Lisa Su, the CEO, came out and said that the MI350 series outperform NVIDIA's latest offerings in inference speed and cost effectiveness, inference being the gold mine as it relates to AI advancement and LLMs. AMD's current market cap is $200 billion. Obviously, that's impressive. It is a mega cap, but nowhere in the sphere of the Mag 7. However, if it is true that their latest chips actually beat out NVIDIA's in terms of inferencing and in terms of cost effectiveness, because they're much cheaper, then we could see NVIDIA gobble up some market share. And if you combine that with the technicals and you take a look at this bottoming out process here and this momentum, I do think that AMD is going back to where it was trading in the highs, at least above 170. Obviously, AMD got all the way up to 227. It will have to continue to impress. It'll have to continue to showcase that the hyperscalers are willing to actually buy into that narrative that AMD can be used for inferencing. And to get back to those all-time high levels, we will have to actually see a significant jump in their earnings, in their revenue. Either way, I think it's clear that the momentum on AMD for the mid to long term is bullish here. And I might re-enter those calls on a retest of this fair value gap here. I might actually buy the 125 or 120 calls expiring in December, because I do think that the momentum runs much longer than the short term. Obviously, everything I trade will be sent out in the Discord. If you want to trade with me live, join below. I trade live every single morning at market open. I day trade. And then throughout the day, I send out any swing opportunities, long-term opportunities that I see. And if you want a badass broker that is based in the US, regulated in the US, not based somewhere offshore like in China, and is also fee-free on options trades, not only that, but also pays you rebates for options trades, then check out Public. Anyway, traders, wanted to give you this quick little video while I was on vacation. Hopefully you guys enjoyed it. Hopefully you got something out of it. Let me know in the comment section below what you think will happen, not only geopolitically, if you're interested, but also how you think this will affect the markets. If you want to trade with me live every day, sign up below, subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.
If you've been watching my channel for a while, you'll know that one of the main reasons that I switched over to using Public for my trading is because it's built for the way that I actually trade. Plus, the options rebates are a game changer. At minimum, I'm offsetting the cost of my stock and ETF options contracts. contracts. The more that I trade, the higher the rebate that I get. So I'm actually earning money back in rebates. In fact, I found trading on Public to be super cost effective generally. It has some of the lowest index options fees, and their margin rates are also really competitive. I guess what it comes down to is if you're trading with any sort of high frequency like I am, it keeps your cost to a minimum. I feel like I'm able to do that with Public, and it doesn't hurt that their web and mobile UI are just so clean and polished. The user experience is so much nicer than my old broker, I can't even tell you.